Thank you for joining webinar Quality and Control. You don't have to choose, with Mike Willis from PwC and myself, Raul Varela from Rivet Software. We will be starting momentarily. Hello everyone, thank you for joining. This is Raul Varela from Rivet Software. This webinar is called Quality and Control. You don't have to choose. We're going to go ahead and get started. Thank you for participating. We are lucky to have Mike Willis from PwC joining us on this webinar. Mike is one of the founders of XBRL. He has been involved since the inception of XBRL, has been a proponent helping with the mandates here in the U.S. Related to the SEC and others, as well as very influential and involved in numerous XBRL and standard financial reporting mandates across the world. And in fact, is just getting back from Russia, Amsterdam, and Zurich, talking to some of those regulatory bodies about mandates related to XBRL that they'll be putting in. So, Mike, thank you very much for joining us in this webinar today.
My pleasure, Raul.
Let's get started here. A couple of logistical items. If you have any questions as we go through the webinar, you can use the chat mechanism with GoToMeeting, and you're able to put those questions through, and we will get them and make sure to leave some time at the end to answer any questions that you have. We are also going to be doing a few polling questions. I think there's 3 polling questions throughout the webinar. To make this interactive for the users, we'll be asking a couple of questions related to the topics that we're speaking about, and we will be showing those the results after the questions go through. So let's talk about the agenda. Here are the things that we're going to go through. We've already gone through most of the introduction. We're going to spend a little time talking about quality and quality in the disclosure process. We'll then talk about the consequences of poor quality when it comes to some of the requirements around both the U.S. and international consequences of poor quality. We will then get into talking about control and streamlining that last mile of the financial reporting process. This is really going to be a big part of the meat of the webinar, and Mike has some great things to share around the ability to take that control, and the last item is some details around differentiating features of disclosure management applications that you in the audience may or may not be familiar with. Hopefully Mike is able to share with you some good information about things to be aware of when talking about and researching and understanding the disclosure management solutions and process. Here is the first polling question. The polling question is now open. To ensure the quality of my XBRL filing, and you're able to check all that apply, work with an auditing firm, use an automated review tool, will review hard copies by hand, or I simply trust my vendor. So go ahead and answer the poll question, and I think you can just check the box there, and we will. We can see the polls coming in. We'll give you another minute to, and you're able also to check all that apply. It looks like we have a little over 80% that have voted so far. Okay. Let's see if we can show the results. Okay. Looks like if you can see the results here, it looks like about 17% work with an auditing firm. That's interesting. Maybe some good information for Mike at PwC. 83% use an automated review tool. Okay, that's very good. That's a key to understanding the key validations and things, which Mike will talk a little bit about. 67% review copies by hand. Okay, still going through kind of probably methods that they've been going through for quite a while, and using those same manual mechanisms to review. And then lastly, trust my vendor. And yeah, at some level you do have to trust your vendor, whether it's just software or a service. So good, that's great results. Okay, let's go back to the presentation. With this, thank you for participating in the poll. I'm going to hand over to Mike to start to talk about some of the quality. Mike?
Sure, thanks, Raul. The common errors and risk associated with reporting, the SEC staff has been writing about the errors that they observe for the last 3-4 years. And they actually post those on their website, and there's a link at the bottom of the slide that you can go and read. The types of errors, though, turn out to be very, very basic ideas. Numbers are backwards, things don't add up, calculations are missing, the idea of an extension is just inappropriate. And so there's lots of what I'll call basic elementary blocking and tackling. And the primary reason from a process perspective is that either people are actually looking at the rendering through the SEC viewer, which is very common in an outsourcing environment, which is sort of like me faxing you an Excel worksheet and asking you to review the formulas. You basically can't see them, so you really don't know if things are right or not. And so on the right-hand side of the slide are some examples, screenshots on the top and bottom, of a report, somebody's report, where we're looking at it through an analytical tool. And you can see things that are highlighted in red or orange or whatever color it looks like to you. But those highlights are kind of begging the professional accountant to come and look at this because there might be something wrong here. And so by using the proper analytical tools, you really can begin to get underneath the covers of the metadata and to discover that, hey, this negative value actually should be a positive value. Or I don't have a calculation here where I should, or this doesn't add up, or my metadata is screwed up. And so those basic blocking and tackling ideas are really revealed to you through the use of proper analytical tools. I would also add that if you're just using an automated assessment, using software to identify these errors, then that's probably inadequate as well, because most of the errors the SEC is talking about are actually errors that cannot be detected with software only. These are judgmental ideas, they're subjective ideas, and software is great at identifying objective matters, yes and no, black and white. It's very poor at identifying judgmental activity. So what you can do is sort of get see a bird dog on it, give you an idea of, hey, this might be a problem, and that's what the analytical tools do. Sort of what I hear a lot is, hey, I've got errors, I've got negative values, so what? No one's using this, and what's the big deal? Well, there's a bunch of issues. The reports here have the same liability standing as your traditional reports, and therefore you're liable for those. So just imagine if instead of dividends paid, it was actually dividend income because it was wrong. Instead of revenue, it was actually cost of goods sold. And so those kinds of negative values have a kind of double whammy because not only are they wrong, they're actually backwards. And so if a person takes that information and relies upon it and then comes back to you and says, you know, this doesn't even add up and the number's backwards, well, that's going to be a very difficult legal position to defend given the U.S. Tort system here. The other thing, I guess, and more maybe practical in the short term, is that the SEC has begun to send comment letters to companies and asking them to amend their reports. So there's a degree of reputational risk. There's certainly your personal professional risk with having to explain to your boss why you have to do an amended filing or why the SEC has sent a comment letter to the CFO, things like that. So those are really the more practical in the short term. And that's just for the U.S. If we actually look around the world, if I give the next slide, in other countries where you may operate, like India, the statutory regulator there has actually come out and said we are now penalizing companies and their auditors because the auditors are required to certify the XBRL reports in India because those are the only reports that the company provides. And the government there has begun to penalize the companies and their auditors for misleading inaccuracies in the XBRL report. And that's sort of like what you're going to begin to see. I don't think the SEC is in a position to actually, quote, penalize, but certainly they'll be in a position to send comment letters and ask for amendments and highlight these types of common errors that, frankly, using the right tools are actually very easy to identify. It just needs to be built into your review process. Next slide, please. The other part about the idea of, hey, I've got errors, so what, no one's using it, is sort of built upon two perceptions from when I talk to people. One, we are tracking the traffic around our XBRL document on our website, and we're getting no hits there. And number two, we've talked to our analysts, and our analyst tells us they don't really use XBRL. And so I would suggest that maybe, just maybe, those are not the right questions to ask. The idea that an analyst is going to come to a company website when A, they don't know when you're going to post a document there, and B, when they can get the same information broadcast directly to them for free from the SEC EDGAR system is not a rational idea. The analysts are actually going to sit at home and watch television. They are not going to go down to the CNN broadcast booth and watch it live. And so for that same reason, they are not going to come to your website and manually download your XBRL documents when the SEC broadcasts it to them directly and immediately when you submit to EDGAR. So that initial idea of looking at your traffic really is not one that you should think about, because no one's going to be doing that when they can get it directly broadcast to them via the RSS feed in EDGAR. The second one is that the analyst, maybe a better question to ask your analyst is, hey, how does the data get into the model? Where does that data come from that's in your model? I don't know. That's the question. That's the answer I get. They don't know where the data comes from, unless they manually put it in themselves, in which case you might want to find another analyst. But most of the analyst data is actually being pre-populated by their own data management folks who are in the back room, if you will. And those folks actually do like XBRL. They think it's a pretty good thing because they can get it all pumped to them directly from you via the SEC RSS feed. And so because of that, SIFMA, the Industry Association for the Buy-Side Sell-Side, actually wrote a letter to the SEC asking the SEC to expand the XBRL mandate to all corporate communications, not just your financial statements and MD&A, but literally all corporate communications. Next slide, please. And they also were sponsoring a conference in New York next week to promote this idea. So the idea that the analyst community is not using XBRL may be a little bit sort of like thinking that no one's going to buy anything over the internet. It may be a little early to say that, because maybe it's just that they do want to use it, they are interested in it, and there are several reasons for that. The main one being that they get your entire report directly from you, and they no longer have to get distorted data from the third-party data aggregators, which is how they've been actually getting your information for the last 15 to 20 years. If you want to see the level of distortion in your report per the data aggregators, all you have to do is take your recent report in hand, go out to Google Finance or Yahoo Finance, and look at what they have for your information. And I think you'll be stunned, shocked, and amazed, because they typically omit somewhere between 25 to 60% of what's just on your primary tables. Now, if you're a typical manufacturing company with a widget type of report, then they may have as much as 75 to 80%. But this is just the primary tables, nothing for the notes to speak of. And that's why the XBRL structure is so valuable to the analyst community. Now, the other thought, if I can have the next slide, please, is that most companies are thinking about XBRL as a corporate compliance mandate, something that's forced upon them by the SEC. As someone who's been involved with it from the very beginning, it's always been thought about as a supply chain standardization idea, something that you can use for literally everything, internal reporting, external reporting, and reporting all over the world. And we are seeing adoption accelerating all over the world, hundreds of regulators around the world. So if you're operating in a multinational environment in plenty of countries where you have legal entities, please do not think about XBRL as 3 Qs and a K. It is simply not an SEC matter. It is something that your UK tax returns, your statutory reports in Italy, India, and Singapore are all in the XBRL format today. So as you start to think about this, it's not just about the 3 Qs and a K. It literally impacts your reports in countries all over the world. Next slide, please. And to give you an example of how standardization can reduce your compliance costs, in the Netherlands, in Australia, in Japan, in Singapore, and Belgium are countries that are collaborating on something that is referred to as standard business reporting. And this is a process idea of convergence. So when accountants in the U.S. hear the words convergence, it's very common to think IFRS versus U.S. GAAP, principles versus rules. But when a minister of finance or a treasurer of a country thinks about convergence, they're thinking about process convergence. And so what they're doing in these SBR programs is that they're taking all the forms that you have to fill out. Think about it. You have tax returns. In the Netherlands, you have water board returns. You have statutory returns. You have your exchange returns. You have all these different forms you have to fill out on a whole range of accounting bases, IFRS, Dutch GAAP, cash basis. They're all different. So the Minister of Finance and Justice there took up all the forms, 5,000 of them, and looked at the data elements, 200,000 of them, and converged them into a single data set of about 10,000 elements using IFRS principles. And so today in the Netherlands, you can actually submit one XBRL document to the Minister of Finance that eliminates your need to file any forms with any agencies in the country. So if you have operations in the Netherlands and are not taking advantage of the SBR program, there's a great opportunity for you to eliminate a lot of your current manual assembly activity. Next slide, please. Now, to do that, you really need to rethink your business process. And here's where this idea of streamlining the last mile and disclosure management comes in. Because what it does, it begins to allow us to automate and streamline what I'll call the pre-Henry Ford manual assembly efforts, where highly skilled craftsmen manually assemble the cars by hand. And by applying standardization a little earlier in the process through the disclosure management applications, we can now begin to attack the manual report assembly, the manual review activities, the manual aggregation of spreadsheets, and bring some internet-styled capabilities to the review process, things like collaboration and socialization. So these general benefits I'll get into in more detail, but I think first we've got a polling question. Raul?
Thanks, Mike. We do have another polling question. The question should come up now, and the question is, how big of a concern is loss of control with regards to turnaround times, publishing information, etc., to you as a SEC filer? Is it a great concern, a concern but not a priority, not really a concern, not a concern at all? Go ahead and fill out the poll. Some people are voting, coming in. On my screen, it's pretty cool. I can see the actual numbers coming in as they come in. The percentage is changing right before my eyes. About 80% have voted so far. We'll give it another second here. Okay, it looks like the majority of folks have voted. We'll go ahead and make this viewable to the attendees. 56% think it's a great concern. 28% a concern but not a priority, and then a much smaller percentage are not very concerned. I will say that from Rivet's perspective, we do hear this along the lines of the poll that we just saw. Many of our clients, a majority of our clients, are asking about those disclosure management capabilities, the things that Mike's talking about, and how can they gain more control of their process. So great, this is good information. All right, we'll go to the next slide, and I'll hand it back to you, Mike.
Thanks, Raul. So kind of continuing on, and clearly the disclosure management ideas, that's a transition from the traditional grocery store management approach of having inventory clerks put the barcodes on the products when they stock the shelves to applying the idea of the barcodes or standardizations earlier in the supply chain so so we could use that standardization to automate our inventory management. And so in the context of reporting, we're talking about report assembly and review activities. So let's first understand how things work today. Overly simplified picture, but in the box is our accounting records where companies have spent a lot of money on their ERP systems and consolidation applications and their processes at work there. The only problem is that there's no real connection, physical or logical connection, between these systems and the actual reports. Now, sure, I can crank out a P&L or I can crank out a balance sheet, but can I actually crank out my notes or my MD&A or all the information that's coming from a whole range of sources inside my organization? And so if I have an adjustment that adjusts net income, I have to go around and change that amount in each one of the reports at the top of the page. My 10K or my 10Q, my XBRL report, my press release, my board package, it just goes on, because those documents are actually repositories of the data. And so I have to go and change those. And that's not the case in disclosure management, but those kinds of process changes are a completely different idea. But in today's manual last mile, because the report assembly process is manual, and we're actually keying into that gold copy of Word, that's the problem. Now, that process of assembly, we're going to automate that, and we're also going to use the same exact tools that we all know and love, Word and Excel, because that's what most people use for reporting. They don't use Hyperion. They don't use SAP. They don't use Oracle. They actually use Word and Excel, and it's because of this manual assembly idea. Now, I didn't get a chance to change this, Raul, but I did notice that there is something wrong with the slide, and that the spreadsheets here are not really drawn to scale. But I guess that's okay, because if they were drawn to scale, they'd probably overwhelm the entire page, which maybe is why we should leave it alone. Mm-hmm. Right? But the point here is that this idea of manual assembly with spreadsheets is sort of an overwhelming idea. I talk to companies every day, and they literally are manually assembling thousands and thousands of spreadsheets every day because of how their infrastructure works, and that's just the way it is. And so if we go to the next slide, an early solution is disclosure management, where we can, basically it's a report writer on steroids. And there's two fundamental things in my mind that this does from a process perspective. One, it allows you to connect your report to the source of the information, whatever that is. That can go directly to a consolidation application, or it can also go to an aggregation of some type through a spreadsheet. So it doesn't have to go directly there. It can go indirectly there through a spreadsheet. The point is you can connect the report, so if something changes in the source, it's automatically changed in your Q, your K, your press release, your board package, etc. The second thing it does is you actually can tie it physically to the taxonomy. So just like you've never seen an inventory clerk in the last 20 years put a barcode on a product, in a disclosure management environment, you never see anybody apply an XBRL tag to a report because it's mapped. It's part of the labeling process. It's built into the process. It's not something that happens after the process. It actually is built into the process. And those are the two basic ideas, and what that enables you to do is to realize a whole lot of process benefits. Now, I'm going to go through some of those generic ideas in detail, but I'm going to turn it over first to Raul to give you a real-life example.
Thank you, Mike. The last slide that Mike just walked through is exactly what many of our clients are doing today. One example we wanted to share is with one of our clients named Helix. They're about a $2 billion market cap oil and gas equipment services company. They use our disclosure management solution to file both their XBRL and their EDGAR HTML to the SEC from that single source. That's Microsoft-based, utilizing the capabilities of Word and Excel for the content creation of those disclosures. The key for them is they've linked their Oracle financial data from their general ledger directly to the Crossfire disclosure management solution. So what it does is it streamlines the process exactly the way that Mike just showed, getting that data from the originating source and flowing that data into the disclosures which then are tagged with XBRL, the taxonomy, the formatting for Edgar HTML, everything is already in place based off of that Word document. And the folks over at Helix have gained a tremendous amount of efficiency in their process, and we're happy to have them as a client and excited about our other clients taking the additional steps to begin to link to their data, which is really where you really get value when you're talking about a disclosure management system. So just a quick example that's happening today with one of our clients.
Thanks, Raul. Let me cover a couple of generic implementation considerations, a couple of generic process enhancements here. I mentioned about automated report assembly, and Raul just gave you a good example of that idea. Now, the point I want to make is that many people aggregate information in spreadsheets, and then the summary of that is what actually gets into the report. And so it's not like you just have to use the report, the final report. You can use the aggregation almost like your work papers can be built in the disclosure management environment. And so things like a tax provision or a debt summary or an inventory summary, all that kind of summary information can be aggregated and automated in the disclosure management application. So it's not just around the report assembly, it's also about the supporting schedules that can also be automated. And I think that's a very key idea for most companies where they have thousands of spreadsheets. Another idea is around validation. How do you know that your balance sheet doesn't foot? How do you know it doesn't tie out to your inventory note? Well, today you do that because you manually check it. In the disclosure management application, you actually can build in those validation rules as part of your process. So if your report doesn't tie out, if it doesn't foot, it will actually tell you that. And so you're not relying upon a person who may have not gotten a good night's sleep the night before, maybe a third-party auditor who might have been out as well, didn't get enough sleep, or maybe has some kind of personal situation, and they miss those things. I cannot tell you how many times when I'm looking at an XBRL document that is either missing a calculation link base or has a calculation link error, when I actually dig into it, it's because the actual company report has a mathematical error. And it's simply because the company is doing it manually and has not applied the validation capabilities of a disclosure management application. Some of the applications can generate automated narratives, like my revenues increased by X% over the prior year, or X dollars. All those kinds of what I'll call generic fluctuation analysis can be automated. In the review area, two ideas, one contextual, the other one collaborative. Contextual meaning, I'm going to give you a 150-page document. I'd like you to review all the tax disclosures. Well, that's linear. A contextual idea would be, well, I'd like to see all the tax disclosures in this document as one view. When I can do that, then my tax department can actually make a much more efficient review of the disclosure and compare that to a disclosure checklist. And that tax department could be you, it could be one person, it could be a team of 30. It doesn't make any difference. They still are going to get a much more efficient review of those disclosures. The collaborative idea has to do with how you currently review your document. And this one actually provides you with significant time saving. If you think about how long it takes you to version a report, you send it out for a review, everybody makes their edits, they send it back, and whoever gets that, congratulations, 30 to 50 Word documents, they get to put all those changes into the gold copy of Word. The other problem with that is that if Raul and I are both providing comments and we're in the tax department, he can't see my edits and I can't see his until we get the next version back and we see what changes were made. Well, in a more collaborative review environment, it's more like a Wikipedia page, in that he can see my edits, I can see his. He calls me on the phone and can say, Mike, I don't know what you're talking about here. I got this. You're screwing it up. Please stop. It's that level of transparency in the review process through the collaborative review features that enables companies to take their versioning timeline from, say, 2 to 4 days into something you'd measure in hours, say 8 to 12 hours. Because people can see each other's work and help each other, it just facilitates the normal process of collaboration. Another area here I mentioned earlier was XBRL is simply a byproduct. To produce an XBRL report out of a disclosure management application should be a file save as activity. Benchmarking. How do you do benchmarking today? Maybe a college intern, do it during the summer. Well, disclosure management applications that can consume XBRL out of Edgar, my tax department can now actually, in their Excel worksheet, in the summary, they can point that Excel worksheet at Edgar and suck out our peer company information just to see where we stand in the process. Now, why would we do that? Well, we would do that because that's exactly what our primary regulator, the SEC, is going to do when they get the report. So I can either do it now or I can do it later and figure out where I am. And if something like your discount rate on your defined benefit plan was, say 3 or 4 standard deviations outside the norm, then that might be something for you to be concerned about. Better to know that before you submit your report rather than afterwards. Now, the idea of the virtual service center really ties back to things like India, the Netherlands, Spain, Italy, Singapore, Japan, Australia, wherever you're operating internationally. Today, it may be that you have a team of professionals in that country that are handling your statutory reporting. As these countries move more and more to XBRL and you think about disclosure management, it gives you the opportunity to rethink your process from something that's highly manual to something you can begin to streamline and think about putting in a virtual service center. It enables those people in the country to actually be more effective in their job because they're going to spend less time doing manual assembly work and more time actually doing the analytical work. So it takes what used to be an 80% manual, 20% analytics, and simply flips it the other way so that they're spending a lot less time on the manual activity and more time on the actual analytical activity. Now, some implementation considerations on the next slide. I'm just going to cover a couple of these, but there is one in particular that I really want to talk about, and that's the first one. 15 years ago, when I was working in Silicon Valley, it was very common for any company to have a webmaster. And in many companies, the webmaster was the only person in the organization who had access to the Internet, because obviously the Internet wasn't relevant to any of the employees. Now, while that sounds like a crazy idea today, that, in fact, is what many companies do with disclosure management. One of the first questions I ask a company is, how many people are using this tool? And if it's 2 or 3, that's exactly like the webmaster was 15 years ago. If these applications allow people to automatically assemble information and reduce the level of manual activity, you don't want 3 or 4 people using it. You want your whole team using it, as many people as possible, because it's going to make their lives more effective. It's going to make them more energized about what they're doing. It's going to remove that level of manual activity in their lives and give them more time to actually think about what they're doing. To me, that's probably the #1 key implementation consideration. There's some others here. I think I've kind of touched on some of them. I would like to mention the idea of drilling down into transaction level information. This sort of starts to pick at sort of driving the idea of standardization all the way back against your ERP systems so that you can actually begin to use these disclosure management applications to pull out a whole range of information that might be useful for management reporting, MD&A, lots of other types of internal processes. And I've talked to companies. Some people use these for internal accounting memos, a whole range of ideas. Give it to your people. You'll be amazed at how they use these tools. Raul, I'm going to cut it off there and maybe turn it over to the next polling question.
Great. Thank you, Mike. We do have another polling question. It should be coming up now. Do you believe there is value in XBRL? Okay, this is not a loaded question. Choice A, yes, I currently utilize XBRL for business intelligence. Yes, I currently utilize XBRL to improve my own filings. Not yet, but I can see how there will be value in the future. And lastly, no, and there never will be. I also want to mention, while the audience is filling out the answers to the poll question, if you have any general questions that you would like to pose to myself or Mike, please use the question section in the GoToMeeting, and we've already had a couple of questions that have come through, and we'll make sure to leave some time at the end to answer those questions. It looks like over 90% have voted, so we'll go ahead and release this poll. 22% say yes, they utilize XBRL for business intelligence. That's great. 19% currently use it to improve their own filings. That is also something we see regularly with our clients. And the third option, 52% say not yet, but I can see how it would be used, and only 7% agree with Mike and I that there will be use at some level, and no, there will never be access. A very small percentage say there. So great information. We're actually going to share a couple of examples of where XBRL is being used. So Mike, I'll let you take the first one.
Sure, thanks, Raul. You know, you would think that the idea of XBRL and standardization is one that is very obvious. Here's an example of a company who's using XBRL to transform their investor relations site. Okay? So you probably recognize this company, and you would think, wow, these guys have really got their act together. Why would they need XBRL? Well, for the same reason that SAP wrote a paper about how they found value in XBRL called SAP's Journey, our case for XBRL. So what you find when you actually dig into the software is that many people have been managing information as documents. And so they have tons of documents. And so your website probably works the same way, is that people are managing documents, they're putting documents on the website. And so congratulations, I've got this big stack of documents that I have to refresh all the time, have to prepare them all the time. And so great, we're in the document building business. Well, Microsoft is a very sophisticated company, and they saw that, and they said, well, how can we be more efficient? How can we lower our costs? How can we be more effective in producing these documents? And they knew the XBRL standard because they've been involved for a very long time, and they know that XBRL sort of separates the idea of content from presentation. So what they did is they created presentation concepts, what you see here as graphs and tables and whatnot, and they separated that from the data. And so today, the Microsoft Investor Relations site is basically a bunch of XBRL type of presentation templates that simply sucks up the data every time the data is refreshed. So they're no longer in the document presentation business. They're now in the data business, which is what they're trying to disclose is the information. They no longer have to prepare those documents because they're automatically prepared. And so by using XBRL in a very creative way and in a way in which it was designed, Microsoft actually has reinvented their investor relations site, made it more efficient, and lowered the cost of their own business process. There's one example. Raul, you have another one.
I do, and just along with the polling question, where we see clients starting to use XBRL is first with their own filings. They're doing things like comparing their tags to their competitors. What did my competitor use for this particular detailed footnote, table or narrative or specific information there, because I either want to use the same thing or I want to be consistent with my industry as far as tag selection, which is kind of the second question on the poll. And then they start to move into using it more for what we would call business intelligence, and that's this example here that we want to share a company that we work with named NHI. They're about a 1.7 billion market cap REIT, and it's a very interesting case because they actually don't use Crossfire for disclosure management, for the creation of the filing to the SEC. But what they are using Crossfire for is that benchmarking peer comparison. They have 17 of their closest competitors that they're taking the XBRL directly from the SEC site via the Crossfire application, and they're comparing the results side by side. And there are some specific things that REITs disclose in their Qs and their Ks, and they're comparing those things across those 17 companies, and they're even able to do it before they file. So they're able to look at their own filing components, the line items that they're going to be filing, and they're able to see the 17 competitors before they file their application. And any one time one of those new competitors files SEC or information to the SEC via XBRL, they simply click refresh, and they're getting the most updated information. So it's a really interesting case, and we're seeing more and more companies that are starting to do it just with their internal processing, understanding the results of their competitors. A few more things that we're going to talk about here. I will hand it back to Mike to talk about a few more items before we get to some Q&A.
Sure. Well, the ROI considerations here, this is just a mathematical formula of the cost and the benefits associated with disclosure management. I think what you'll find is that the amount you might be paying for outsourcing, including Edgarization, including typesetting, those types of costs can actually be, if not eliminated entirely, they can be drastically reduced because you're now in control. You can submit directly into Edgar using many of the disclosure management applications. You can also produce the document in any format you want, PDF, etc. And so the idea of typesetting is not something, that's a manual activity. You can automate that now. So you can use the collaborative nature of the disclosure management application to eliminate a lot of those costs. Some of the costs you do need to think about are the cost of the license and any implementation or software training activities with your people. One of the things I have noticed is that because these applications are somewhat collaborative and enable people to share their work with each other, there is almost an incentive for folks to help each other learn how to use the software. So that does tend to impact or reduce your training costs. The other thing I'll mention on the licensing is that there's a subtle difference between client-server and cloud or SaaS-based applications. The client-server applications are more like buying a car. You can put as many miles on it as you want. You can run as many reports through there as you want. The SaaS applications or cloud applications tend to be by the drink. And so if you are thinking about a cloud application and you're thinking about 3 Qs and a K, that looks economically very pleasing. If you start thinking about hundreds of reports, those economics don't look so pleasing. So, you know, it's just like buying a car versus renting a car. The idea of buy the drink is a real economic differentiator and one that you should be aware of as you consider the ROIs. Now, the next slide has some other differentiating application features, and the one I just mentioned is really the key one in terms of the nature of the application. But it's not only the licensing, it's the ability to connect your report, to connect your spreadsheet to your source information. That is what's going to enable the most significant process change in your organization. Being able to suck up that information from anywhere in your organization or anywhere on the internet. It, in substance, the disclosure management applications that can consume XBRL basically turns Excel into a browser. You can sit in Excel and you can consume that data from anywhere. The idea of manually loading data into Excel evaporates. Think of Excel as a browser, and that's what we're talking about here. That is a huge differentiating feature if you can consume it. Now, the interoperability with applications, if you can't consume it, is clearly a key consideration. How does it allow you to manage your validation rules? Is it flexible? Is it very rigid? How collaborative are the workflows and the administrative features around that collaboration? This is particularly key in terms of who has access to that. Presentation management, like in the case of Microsoft and their investor relations site, do you have a lot of flexibility in terms of the different presentation concepts, and can those be easily reused? Technical compliance, inline XBRL. Not something that the SEC has made available today, something that I think is right on the horizon. So a key feature, iXBRL or inline XBRL, is required in other countries. And so as you're looking at disclosure management and you have operations in, say, the UK or some other country like the Netherlands or India, you want to make sure that your application can support the inline XBRL idea. As well, taxonomy management. In many of the outsourcing environments, you're actually kind of thrown the taxonomy and told to go find the relevant tags. Many of the disclosure management applications have what I'll call taxonomy management wizards. No different than the spell checker in Office. The taxonomy management wizards are going to look at what you're typing, and they're going to suggest to you, here's some taxonomy elements that look like they might be appropriate in your situation. That's much the same as a spell checker in terms of it's going to automate and streamline that process. It's not like you trying to find the word in a dictionary when you don't have how to spell it. So those are some of the differentiating features in disclosure management. Each of the disclosure management applications are different, so it is useful to kind of go through the checklist and kind of see which one best meets your needs. Raul, that's it for me. I'm happy to take any questions.
Great. Thank you, Mike. We will open things up for questions. If you have a question, you can submit it through the chat or the questions section in the GoToMeeting panel on your screen. The first question we have so far is about the implementation considerations that you spoke of earlier, Mike. The question is, how much time does it take to implement a disclosure management system in your experience? Why don't we double team this one, Mike? Why don't you answer it, and then I can provide some an example or some information from what we see with Rivet.
Sure. I'm going to give the classic answer first. It depends on how you implement it. But we've seen people implement these fairly quickly, meaning you'd measured in weeks, 4 to 6 weeks. And that's sort of the all-in. In that case, you might use an external consultant. We've also seen people take as much as a couple of years and do it, one bite of the elephant at a time, where they actually, put 1 or 2 notes into the application every month. And so at the end of a couple of, a year, 12 months, they actually had it all in. They did it themselves. And everybody learned how to do it as they went along. So it was a parallel process over time. So the range is, anywhere from something in a couple of weeks, I'd say 4 to 6, into as long as you want to build it in and train your people.
Well, thanks, Mike. And my answer is very similar. We have had clients that have implemented our solution, again, very quickly, in preparation for a particular quarter. So within that quarter, getting the application up and running, and have had others that have taken much longer. One of the things we see regularly is with an application like ours, clients can go as fast or slow as they want. All of the clients that we help file XBRL for are using the same application. So one of the advantages is that they're already using the application. It's really a matter of how much more do they want to use, or are they starting to think about taking on owning the XBRL aspects from the service perspective? Are they still wanting Rivet to help with those XBRL tagging intricacies? Also, another consideration is when are they ready to get to their data? The example we shared of the company Helix that's linking their Oracle financials data, that takes a little longer to tie in data from an underlying source like that. But once you have it implemented, the benefits are extreme. We also have some clients that kind of take baby steps along the way. Our solution integrates Word and Excel in a very nice way. So what many clients do is they start with just getting their data in Excel, integrated into the Word disclosure with XBRL wrapped around it, and they start there. So they're managing their numbers in Excel, managing the content in Word, and then you may or may not have Rivet help manage the XBRL and the Edgar filing. And then as they get familiar with that and start using that more and more quarter to quarter, then they start thinking about, well, you know what, I have this data in Oracle, let me take that additional step and link it to my underlying GL. So it does depend, but there's a lot of different ways you can approach it. Next question looks like a Crossfire specific question. Can you use Crossfire for any taxonomy or only for the SEC? Easy answer. The answer is you can use it for other taxonomies. We have mainly been focused on SEC and helping clients with SEC filings, but we have built the Crossfire application to be taxonomy agnostic. So if you're doing a filing in another jurisdiction with another taxonomy, we can help. However, we haven't focused on anything outside of the SEC at this point in time. Another question has just come in. What do you suggest when you use your people refer? What do you suggest when your people you refer to as just you? Good question. We do have many clients that only have one person that is actually managing the entire process, especially for some of the smaller Wave 2s or Wave 3s that we support. And that one person may or may not have a huge need for the tremendous amount of collaboration that Mike talked about, where you might have 3 or 4 reviewers, some people in tax, other people in another group that are reviewing certain or owning or reviewing certain content or certain aspects. You can still gain a lot of benefit from having a single source application, doing everything you need to do as one owner of that application in one place. And if you have anybody that reviews, even if it's your legal team, outside counsel, or even your auditors, it's still another mechanism to have that single source for your entire set of disclosures, both XBRL and Edgar HTML. Let's see if we have any other questions. I think that might be it. If you have any other questions, we can stay on the line here for another minute to address them. And I'm just scrolling through here.
Raul, I have an editorial comment. I want to kind of come back to the quality of the report and the automation that disclosure management provides, because it does tend to strengthen your process and your control environment and give you more reliable reports every period. We don't see that in the manual activity, much like the grocery store managers didn't see that when they first got started with manual application of the barcodes. Many companies look at the SEC comments on common errors and they think to themselves, that's not me. Because I've got a vendor who knows what they're doing, I've got a software that was put in, and all I can say is my kids say the same thing, not me. I have yet to look at a report, any report, where I didn't find at least a couple errors in it. So I would really encourage companies to think about this just as a way to increase the efficiency of the reporting, but also the quality of the information they're disclosing, because as I said earlier, the analysts and the regulators are using this information, and the SEC staff is clearly finding these errors and pointing them out to everyone. So, Raul, thanks for allowing me to participate today. I appreciate it.
Thank you, Mike. I think we will conclude with that. We really appreciate and are very thankful to have somebody of your expertise and knowledge of the topic to join us on the webinar. Thank you for all the attendees that have participated, and thanks for filling out the poll questions. We hope this was beneficial.